Hello and welcome to Leaders of Tomorrow, India's largest platform for entrepreneurs. If you've got any questions related to any aspect of your business, we've got it covered right here on the show. I'm Sananda Jayaseelan tonight, taking forward our in-depth conversations around personal finance. What, where, and why should you be looking at different asset classes? What are those asset classes when it comes to investing and saving your money? All of that being decoded on this weekly segment tonight. I'm in conversation with Naveen Mathur, Director Commodities and Currencies at Anand Rathi. Naveen, thank you so much for speaking with us here on Leaders of Tomorrow. Given your very close association with the commodities space over many, many years, I think a good place to start today's discussion would be for you to give our viewers a brief sense of your own association with the commodities market.
I think as far as my experience goes, I'm thick and thin on the commodities business for the last 14, 15 years. And I've gone through with ups and downs of commodities when it started in 2003 until date I'm engaged with these markets. Commodities has always been an alternate asset class because it's not a bread and butter for the capital markets. But in the real economy, Sananda, these are the markets which are really make our daily lives to happen. Means commodity per se is being used by each and everybody in our daily lives, starting from the crude in the form of petrol and diesel, in the form of agricultural commodities, gold we buy and we sell. So base metals like copper, aluminium, all these are commodities and they are part of our versatile life on a day-to-day basis. But we don't realize the importance of these markets from the personal finance point of view. Even if we are a businessman and we are using raw materials for these commodities to manage the margins for my business or the profitability, just for a simple reason that we don't understand the nuances of these markets. So it's been a great journey overall, but somehow I have not been able to see the kind of the growth in these markets, or the markets being given the industry status. I'll tell you, since 2003, when these exchanges, the MCX or the NCDX exchanges came up, there has been many initiatives taken by the intermediaries and also the exchanges, the regulator, FMC in the earlier times, now the SEBI, has been taken up. But having said that, it's not took off the way it should be, which I will share with you in a later part of the discussion. But honestly, let me put certain facts and figures in front of our viewers. In spite of these markets, commodity markets are the second largest markets after the fixed income markets in the world. Globally, the commodity markets are much more vibrant, and the volumes which happen on the global exchanges are the second largest after the fixed income product.
Naveen, that was going to be my second question. Now, for someone who's watching today's interview and saying, great, I want to look at the commodity space, I want to look at commodities as an investment. What is the starting point? Why should they perhaps be looking at the commodity space? What would you want to tell them about why it is crucial? You started today's interview by saying commodities, of course, are seen as an alternative investment mechanism, but given everything that's been happening in the primary markets, what are perhaps some of the top reasons why entrepreneurs, investors should be looking at the commodity markets? What's the big picture? What's your outlook?
Sunanda, first of all, let me break down the two parts of commodities. One is definitely the commodity as a raw material for the industry, where you do certain strategies for for actually making your margins sustainable. And the second one, which is much more important on the personal wealth side, is something which I would like to discuss a little bit in detail. Now, commodity, and I would talk about only two of them currently, the bullion space and particularly gold or the silver. Now, if you see, Sunanda, that a very recent example, why it is important. Uh, the commodity, particularly gold, is absolutely having an inverse correlation to the risk assets. And gold is treated as a risk averse asset. I would
Okay.
say 2020 is the kind of a year when one, if should have been invested with risk averse asset classes, would have mitigated the losses on the risk assets. No, what I'm trying to say over here is that yes, the equity markets were booming until January last week. I think last January 2020, I think the index did touch 42,000. Oh, sorry, Sensex did touch 42,000 kind of levels in January 2020, and the Nifty was trading at around 12,500 kind of levels. So people were interested to be part of this rally to make money. Now, we all know what has happened in March and by April, where the risk assets and particularly the equity markets were. Means we saw Sensex at around 25,000 and Nifty touching at around 7,500. Now, and in these times, what do you do? Means you have not noticed the importance of the alternate asset class, or I would say the risk averse asset classes, but now you are kind of stuck with the portfolio and the kind of a scenario which we have all gone through in the last year, which is a pandemic and kind of a once in a lifetime experience. So much of an uncertainty, and you don't know when your portfolio would be in green again. And unfortunately, if people who have been part of this particular rally, the 2020 rally initial months, would have been stuck at the high levels and the losses would have been too much to sustain. At the same time, Sunanda, that portfolio just for the equity would have made dramatic losses if, say, for example, if you are some part of a portfolio is invested, say, for example, in gold, and since being a risk averse, an inverse correlation to the risk assets, particularly equity, I would say that the people would have actually curtailed some part of the losses because of the positive uptick of gold till August. So gold
Yeah.
touched an all-time high for various reasons. So it's kind of a risk-averse asset class which takes
Yeah.
cues from pandemics, geopolitical reasons, etc., etc. So that uptick on gold and a new highs every day till August kind of scenario would have curtailed your losses, and I'm repeating, curtailed your losses on the risk assets.
I'm going to slip into a break on that note, but much more on the other side. Do stay tuned. Welcome back. You're with us here in Leaders of Tomorrow. And tonight, I'm continuing to bring you a series of conversations that we're doing once a week, bringing in experts across the field of finance, experts who will tell you how to manage your wealth, how to hold it right, how to invest it right. And today, I'm speaking with Naveen Mathur. He's the Director of Commodity and Currencies at Anand Rathi. So then let's talk specific assets. The biggest one, of course, is gold. We as Indians love gold as an asset. Typically, our approach to perhaps investing and saving has been to buy gold jewelry. Now, whatever may be your approach to investing in gold, just talk to us about the historical perspective on why gold may or may not be a good bet when it comes to the commodities market. And also, what in gold? Gold ETF, gold, bars, gold itself is jewelry. What would you advise?
For a retail investor who's wanting to accumulate gold, I won't say just the holdings, but as a corpus, I would say the sovereign gold bonds and ETF would be the
Okay.
right places to be with. You have the Nippon Gold Bees, which are traded very liquid, traded on the NSE and the BSE platform. So if you're kind of a digital savvy person, you know how to make a portfolio, you do it on your own. There is just a click away thing to buy and just keep adding up in a staggered way. Now,
Yeah.
don't do it. Just don't stop at that particular investment in gold if you feel अब इससे ज्यादा भाव नीचे नहीं आने या बढ़ने नहीं है, but keep it doing it on the staggered way, and that's underlying theory should be to do it staggered way, not stop any month or any quarter, whatever kind of an allocation you want to give, whether it is negative or positive. So what normally happens in the times of distress, we feel okay,
Yeah.
I'll commit myself to buy 2 units or 200 units of gold ETF, and I will do it every month because I've just burnt my fingers, and that burning sensation is still uh, is with me. So I do all that to ensure that I will not digress from whatever planning I am doing today. But but if you are in December 2020, November 2020, and today, I think people would start thinking about then when this particular money which I'm investing in gold is to be better utilized in equity markets, would give me better returns, entire thing fizzles off. So what I'm trying to say is that
Sure.
it's an effort over a long term would give you the best of the things in the times of distress than anything else.
Okay.
Staggered
Okay.
positions involved in gold ETF or in the sovereign gold bonds, I would say would do pretty well for the retail customers, urban retail customers, but the rural population or anybody, even from the urban side, if they are looking forward to jewelry and kind of, I would say, the bars and the coins would do good for them. But as far as the exchanges are concerned, Sunanda, the MCX, the commodity exchanges, I think that's more to do with hedging. Yes, people do take delivery and give deliveries at these exchanges. For the retail customer, I think the better option would be the sovereign gold bonds and particularly the ETFs.
I just very briefly asked you on oil, Naveen. So let me sort of come back to that, and we'll have that chart up on our screens as well, talking about oil. Last year, when we had the OPEC meeting, almost 1 year ago, we saw the way oil behaved, 24% plunge in oil prices, and oil continues to be so volatile in terms of pricing. Again, commentary on what's going on as far as Saudi Arabia is concerned and output, OPEC and the decision that they take. We've recently seen that terrible snowstorm in Texas, that having another impact. Given all of this, really, what is your advice when it comes to oil? How are oil prices behaving? Just the macro picture, if you can break it down for us.
So, Sunanda, the last year has been a pretty dynamic space for the energy markets. Uh, what we saw on the other asset classes being an all-time high, we did saw crude oil to be an all-time low. Means never in the history it has happened that the crude oil prices or any commodity prices can go down on the negative. April expiry of NYMEX, and I'm talking about April 21st expiry on NYMEX 2020, closed the crude on the negative pricing. And if I'm saying negative pricing, it touched approximately $36 negative. It bounced back by July, August to around $40 and currently at around $64, $65 per barrel. Now, there are different stories for prices touching negative. There was no demand. The entire world was on a lockdown, and crude is largely for travel, industrial use, etc., etc. And when everything across the globe, not only in our country, across the globe was on standstill, there was nil demand, but the supply was continuing. So there was a supply overflow versus the demand negative, which made the crude oil prices to be negative. Now, yes, the OPEC is trying to get that share of their part in the crude oil, but the dynamics of the crude oil scenario now is largely not restricted to OPEC. It is restricted with even OPEC plus, which is including Russia and the other allies. It's hard to believe, but I would share that the crude oil per se in the US was an importing commodity. They used to import 90% of the crude oil from the Middle East countries, but they are exporters today. So the kind of an importance of OPEC has somehow changed over the course of year in the last decade. As far as the coming meeting is concerned, I think they are concerned about the pricing, and I think they are going to be a kind of a status quo with what policy they have taken up in the last meeting of OPEC. I would also would like to share that there are supply concerns continuing because of this pandemic, and some part of it has impacted the prices on the upside. The other major factor is the economies are recovering, and since it's part of a great economy, the crude oil as a commodity, I think the demand is coming back to pre-COVID levels, or I would say more than the pre-COVID levels. So therefore, the higher the demand, the prices will be higher. So I think everything seems to be positive going ahead. The dollar is depreciating, which is again an inverse correlation to the dollar denominated commodity. So I think going fine, but I don't see it touching around the $75, $80 levels, which we saw in even 2019. So I think it's overall kind of a space which would be largely news-based in terms of how the economies, the GDP figures are panning out for the developed and the developing world. But overall, I think it will be around 60, a broad range, now at around 55, 60 on the downside in dollar terms. And upside can be restricted to an extent of 75 because all the good news now has been discounted in the prices.
Naveen, we've run out of time on today's conversation. Thank you so much for that. But I just want to make a quick note for our viewers watching at home. This is a series of conversations we've introduced around the personal finance space because of what we've heard from you, feedback that we've heard from you watching at home. We're bringing a series of experts across different asset classes, across different industries, across also currencies, commodities. If you, though, feel that you want to hear specifically from one expert, or you want to hear on any different aspect or any different areas that you think is going to matter the most to you, do let us know. We'll try our very best to bring those experts onto our show. For tonight, we've run out of time, but if you have any feedback for us, our contact details is up on your screens as we speak. Do let us know. Thanks for watching. Have a good night.